I guarantee that you're losing money trying to trade choppy conditions. Basically, charts that look like this on high time frames or like this on low time frames. And in the moment, the chop can feel like opportunity, but it's really a trap. And if you want to save money, you've come to the right place. In this video, I'm going to break down how to recognize chop in real time, walk through some examples, and hopefully give you the confidence to stay out until a trend forms. Before I begin, I'm William. I trade Brandon's asymmetric high conviction system, and I've blown a lot of money trying to trade chop. Today, I'm going to share with you how to avoid these same mistakes. Please leave a like and subscribe if you find value in what I'm about to share with you. So what exactly is chop, and why does it always feel so confusing? Well, chop is when price action looks kind of schizo on the chart. It's directionless, it's messy, it's unpredictable, and it trends one way anywhere from a few minutes to a few hours, and then it has instant reversals with no recovery. On low time frames, you might see bursts of momentum followed by long stretches of accumulation, while on high time frames, it'll look like clean breakouts or breakdowns, but they get faked out and reverse within hours. You might think that a breakout has accepted, but then a few candles later, you get stopped out. That's chop. So if it's something that you can figure out, how come traders keep losing? Honestly, chop baits you really hard. I've fallen for it a lot. You've probably fallen for it a lot. A lot of the traders that I mentor also fall for it a lot. And traders tend to think any sign of movement is a signal, and then they oversize on it and end up getting destroyed. They get influenced by a bunch of other people winning random trades with different systems or just from pure luck, and then they end up chasing trades because of that, when in reality they're just chopping themselves to death. They're winning some trades but probably losing even more when the market's barely moving. When the conditions are choppy, the sentiment is pretty much always split. You'll find half of anyone you hear from bullish, while the other half is bearish for whatever reason. And people will find any thesis at all, like ETH is bullish because of X or BTC is bearish because of Y. But if the price action is not backing the thesis, it's just not a trade worth taking. Low time frame trends might line up with a bias, but if high time frame disagrees, you're taking lower probability trades. That's why everyone is just super confident until they get blown the fuck out. So if you've ever looked back at the chart and at the same time when your community might be spamming bullish talk at peaks and bearish talk at lows, you'll be able to really study the chop psychology in action. And it even happens in the best communities that you might know about. So next, you might ask how to recognize chop in real time instead of constantly being faked out by it. It's actually pretty simple. Ask yourself these three overarching questions. When looking at the price action, you want to ask, is it mostly a straight line up? How do the pullbacks look? Are there higher highs and higher lows? What are the magnitude of the accumulations? Does it feel hard to read? Does it feel like there's clean levels to use to trade against? And on low time frames, do you notice a consistent strength alongside the narrative or rotation? With the narrative and people talking about it, is it the one coin that feels like there's a lot of social attention on it? If it's hard to read the price action, or if you lack conviction, then it's more than likely chop. Clear trends are actually really easy to read, and they give you a direction on multiple time frames, but chop just never does. Another thing to mention is that liquidity plays a role in this. You'll see more movement in any asset during New York Open, CME Futures Open, London Open, and even daily candle opens. But the liquidity doesn't always mean clean trends. Actually, I find chop with heavy liquidity is even worse. And the way that I like to think about it is that big players on both sides are just fighting with each other. And that's just not a war that you want to play in. Sometimes it's probably institutions, maybe rich retail traders. One moment you're going to see large buys followed by large sells, and whoever it is, it's just messy and not interpretable. So put that in contrast with sustained buying during this period of time, like with ETH when SBET was bidding it. That's a real trend. And that begs the question, how do you know when chop turns into a trend? The chop ends when consistent strength starts showing up. not just random spurts, but repeated, sustained buying or selling that never dissipates for more than a few hours. And it even holds during some sell-offs, and this is true in the opposite direction. You'll see majors like BTC and ETH moving hard. You'll see resistances being claimed and flipped into support. You'll see consistent relative strength in top gainers day after day. That's really when the chop turns into a trend. And the reason that we wait for levels to be claimed with this is that you don't need to catch it early. There's always a chance that it just rejects the top of the range that it's in. And so waiting for confirmation above the levels provides a higher probability trade with a cleaner invalidation to use. And if you buy into this confluence, betting on a trend continuation, there's more money to be made than being early to the trend. I'll have an example on this later. So should you trade chop at all? Honestly, most of the time the answer is no for most people trying to catch the larger trend. But if you do trade it, you should probably keep it mechanical and really only be taking lower time frame trades with a reasonable target. Maybe some higher time frame ones if you've outlined your levels pretty accurately. You would probably want to be scalping range highs and lows or using indicators like VWAP or EMAs, maybe sizing down on the trade as well, and just be ready to flip if there are range breaks. And honestly, I would avoid using discretionary conviction here because you're probably just wrong. If you ever have the need to say that price action is being manipulated one way or another, it's probably just large players moving the market in the moment. So just step aside and wait to see if a larger trend forms or just stay out. So I'm going to walk through some examples on strength and even trading some choppy markets, and you'll be able to see some clean setups and the messy ones, and also why forcing trades is just bad. So the first one that I have here is Solana. And if you've been watching the market recently, you'll notice that Sol has been holding a bit consistently over 200, while ETH and BTC have been going down since their highs. But even though there is this overall strength, Sol has had huge fake outs that even at times lost higher time frame structure. So it's just not super clean. I think that there is notable compression on it here, but with the way it is, it's pretty hard to position into a clean risk-defined setup, especially when it can just sporadically show weakness. So really, it's just best to wait for more clear, consistent strength above the key level, which in this case is around 220. So just compare this to somebody in our chat who was so confident in his position, yet at some point went into drawdown on 10% of his portfolio here due to the magnitude of the trade. And he even added more margin at some point here to not get liquidated. So why even sit through that mental anguish for 2 days to be in profit the next 2 days and then be back down to break even for like an entire week or two and then finally be back into the profit? When you can take the trade when it breaks out and starts trending for a higher probability trade and not have to sit through this chop and drawdown. This lets you be more capital efficient. Otherwise, you would have had your capital tied up in this losing trade for over like 15 days, half a month. So the next trade that we're going to go into is Ethereum. And now following like the whole January dump, it started to show some relative strength and start to claim like some highs like over here and start to make some movement. And so at times, like if you're watching the lows here, you can start to notice that it's trending a little bit higher here, and you can take a breach of the level and then just take a trade all the way back up. So we know that 2800 is a pretty nice pivot to use because it kind of lines up here, here and here, etc. And so this is something that I went over in a previous video. You'll notice that when we started to near the level, there was a lot of sporadic price action. You can just see it in the chart. There's so much cluster of schizo price action that you don't really have any conviction trading this either way. Now, low time frame, maybe what you watch for are certain levels like, I don't know, I see like kind of something here, like a range high that you could probably take. And so if you're just trading this range down to the bottom and then taking a retest and then back up, then maybe you can take something there and take some trades within this range. But if you're looking for the big move higher with 2800 reclaim, like, you're going to be wanting to watch the level at 2800 to see what happens, right? And so over here there was some promise because it kind of retested, but at the same time you want to notice, like, what's like the low time frame telling you, what's the high time frame telling you. There's some relative strength here, there's also like continued relative strength here, but it's kind of like a little scammy. But, you know, if it's 2800, it's a big enough level, I think it's valid enough to take it. So you just take it with your invalidations set to a reasonable level, and then, like, yeah, you're blown out on this trade, but imagine if you got it. Like, it went all the way up to 4800 when it happened. So right here, let's say this is the trade, 4800. This would be a 20-to-1 trade. So you can lose this trade 20 times and still be in profit. Now let's try and see what happened the next time around. There was some relative strength that showed up in the market, right? So look what happened here. So compare this to this, right? Do you see the difference? This has like a whipsaw up and down, and then it kind of goes there like over the course of maybe, like, I don't know, 5 days or so. Whereas this has like a consistent smooth-ish curve for like almost an entire month, right? 17 days before it hits the level again. You can see, like, low time frame, of course, there is still like this kind of schizo price action up and down, but overall, like, the higher time frame trend, what is the higher time frame trend telling you? It's a little messy right here because I drew everything, but the higher time frame trend is telling you that this is schizo, while this is showing higher highs and higher lows. It's a little more clean. It's producing like some sort of I guess, like, if you were to draw this, it would be producing a channel. Whereas over here, like, yeah, like, you can argue that this is a channel, but it's like there's not enough price action really to justify it. And so maybe, like, you could tell beforehand that this would have been a fake out. But regardless, like, you notice this strength, you can just take the trade. Same thing here. You notice the strength, you can take the trade here. So if you start to notice the strength, why not just take the breach of these local highs against like a local bottom here, and then take it like all the way up to like your next targets and stuff? Well, that's just because the reasonable target there for taking a trade low time frame is the level that you're looking to have it broken. So you could take a trade here, but I would consider this like a more low time frame trade because you don't know if it's just going to reject off the top and just come back down. It can always just do that like it did over here. Even though this had the price action beforehand to justify it going higher, like, it could just always do this over here. You don't know. I just pasted this in there. You can very obviously see that it's definitely possible to just shoot through and come back down. Like, it looks natural here. So anyways, once it starts showing this relative strength and claiming the level and showing that it's holding above the level, you can then take a trade anywhere against it. So if I put it in the middle here, and then I put my invalidation against the bottom, and like, this trade is like 48 hours after it broke out, you can see that now towards the top, it's an 11-to-1 trade that took about 41 days to actually reach the top. But what you can do is, if you start to see it slow down, you can kind of define that as the top and now take another trade using like this as the breakout. Now you can see like this is also a risk defined setup. You can do this however you want and whatever time frame you want, but usually using like the higher time frame levels is also important. So for example, over here, there was like a 4100 level that we were paying attention to, that if it reclaimed and held, then we can take another trade higher. And so that's kind of what I personally did. So I personally took like 4160 against 4140. You can have like tighter or looser trades. It's really up to your personal preference. but like you can see that up to the top, I got a 31R trade off. But look what happens when it stopped, right? The trade started to go weird and then like started chopping here on a higher time frame. This is not conducive to a trade anymore. Once it stops here, like this movement was just due to some news, I forget exactly what, but then it started to just chop again. So next, I'm going to be going into how I potentially trade chop on lower time frames with a weekend play on ETH that I made. And sorry about the flashbang. This is the style that I use to trade scalps because it lets me see the lines easier mentally. So you can see basically that there are like range highs here to use. There's range lows here that I used as a zone. There's also this range low here that aligns that I used. And so when it was dumping on Friday morning, what I saw was like a reaction here, and then it was kind of holding. So I just set up some limit orders, and then I had a reasonable target to this zone that I used here. And so I wasn't looking to buy this dip to take it all the way back up here. I was looking for a reasonable trade where I risked it against the bottom of the wick, and then I took it to the top of this zone. If something dumps this much, I wouldn't expect it to immediately fill back up in the time frame that I'm looking to take the trade on. I was only looking to take this trade for like a few hours. I wasn't looking to hold this trade for like 5 days. And look what happens over the course of the next few hours and days. Like it just wicks past my stop, right? And also I took this as another setup because it broke down for my zone. When I see these levels, there's only 3 things really that can happen. It'll bounce slowly, where I wait for the price action and judge the direction. And if it happens at a key level that I identify, I can probably scale into a reversal position. But I also should have an invalidation to use. And you could use either the wick that forms or some other price action prior to it to determine your invalidation. It can also bounce hard. So that's what happened over here. I would either have limits potentially to catch this trade up, and you can see I actually prepared that trade at some point, or just stay out and wait for more price action to form. In this case, I didn't put limits here just because I didn't really trust the price action at the time, but in hindsight, like, yeah, putting limits there would have given me like a nice trade back up pretty quickly. Another thing that it can do is just shoot through the level. So you could potentially catch a momentum trade, but also just see if it reverses back into the level and then goes back for continuation. It just really depends on the reaction to the level to see what it does and react away after that. So you can see that like during this moment, I believe that it felt like there was not a lot of liquidity left, like it already made the large moves that were higher conviction to me personally. And so I didn't feel like the market was going to do anything, and it really didn't do anything. And then the next time I did have this trade prepared, but I didn't take it just because this was also like midnight my time, so I was just asleep. There's no way I'm taking this. I could have also taken this against the blue zone as well. And then I'll pre-move the next level as well. So if it bounces hard and it goes to the level it was just at, what are some scenarios that'll happen there? Then I just see if it reacts a certain way to the level and then take a trade after that. So for example, I do see it continuing to react to this blue zone right now as it is. So I'm thinking like maybe I can take a trade here, right? But also right now, like the conditions are really bad, like everything's going down. SPY is going down, for example, as well. There's like war potential. There's like the jobs numbers. So like I might take this, or I might wait for it to just go down and then come back up before taking it and just wait and see. Otherwise, like this is a trade that I'm preparing. I'm also thinking like if it just shoots through this level, then maybe I take a trade down here and I try to catch it this time. Or maybe I don't try to catch it because I don't know how strong it'll be. So I'm just kind of thinking through those things in my head. The biggest thing that I might be looking for now is shorts, because the overall trend is downwards. So where might I be able to look for shorts for a scalp? Maybe like over here. It's very just like variable with what you can do. So the next thing that I kind of want to go over is like NMR. NMR over the weekend was just going insane. Like it went up like 50-60% in one day. And so like I actually caught it at the tail end of the trend. So during that time, I think ETH and BTC weren't really doing a whole lot. I don't remember for sure, but regardless, like NMR was just moving really hard. And so I just took this left curve trade on a momentum basis, and if it lost any of the lows, I would cut the trade. And so once the movement is probably over, and it seems like it's over, it can retrace all the way back to your entry. By this time, you should have taken a significant amount of profits off, and then just leave like a runner. So if your runner stays open, like, and it just comes back down, it's probably over, right? And you can see that it was definitely over after that. It did come back for a little bit, but right now it is way over. So maybe it has a narrative or something, but just trade what you see. And if it's going up clearly, or it has alarm bells ringing in your head that some bullshit is going on, just take it. Like we've seen this so much over this weekend, like World, MYX. We've even seen some on ENA, IP, and even a little bit on Hype. Which brings me to my next point. How do you know when to trade certain coins? Hype, Sol, or ENA, right? Comparing those three. So throughout the time that people were speaking about it, people were asking like, is it time to long ENA now? Is it time to long Hype now? Well, when somebody asked it, like it literally did this and it came back down underneath the level. So this, like, it wasn't like super consistent strength. It looked like very ripply, like it was keeping the lows, but it was creating new highs, which is good. But it just felt like very scammy. Like imagine if you longed it here and then you went into drawdown all the way to your stop where you had your stop here, right? That doesn't feel good. That's just not good. If you see this, it's probably going to do this. What you really want to see is more consistent strength. So even something like this, where it did have like some pullbacks here, like it was still producing like a very nice-ish kind of higher lows to utilize. And I mean, this is a lower high technically as well, but I mean, you know, it's moving up. And it's holding above the level now. And so maybe you can take a trade against this. And then you can see like it just mooned up. And this was mostly because of news. So if it retraced afterwards, that's not good, right? It should probably like kind of curl up and hold. And then that might be good for another trade on ENA. Now, something like Hype was also doing something pretty similar. But for a period of like 3 hours and 30 minutes, it started to just kind of chop after going above all-time highs at 51.2, and then it just dropped back down. So I was personally long here, and then I should have probably cut over here when it started going down, but I mentally started averaging in and coping on the trade. So do as I say, don't do as I do. But yeah, it started to just go down, and like, you know, it's probably just going to go down now because it lost the all-time highs again. It just barred back down. Put that in contrast with what happened over here, right? It started going up again. And really what tipped me off to taking this trade earlier than later was that this felt strong. And the 30 to 45 minutes before I took the trade, the price action at the time, the low time frame price action felt strong. And what do I mean by that? What I noticed was during that time, right? This was from 7:46 p.m. here to 8:52 p.m. my time, where I noticed like it was consistently going up again, and there was a pullback, but it actually held the level. And so I was kind of thinking like, okay, I can take a trade here against here that's super tight with lower size, and if I take it, I can have like a really high risk reward trade. And I feel like there's some strength. It's above the all-time highs again. It started to show some strength again here after tapping these highs at 49.89. And so I think that it's reasonable to continue the uptrend and try my hand at taking the trade a second time. So over here, that's why I took the trade here, because I saw like low time frame, I saw this curling up. But once I started to see this, that's when I probably should have cut the position. And over here, I was just rewarded this time because there was a trend continuation. Like there was somewhat of a narrative as well coming up where people were bidding for USDH. And so that's kind of when like this chop started to turn into a trend. You can see even over here, this is still chop, but there's even low time frame continuation. There's a reclaim of a higher time frame level, and so it's worth it to just take the trade. That was just where I took the trade, and I got a nice risk reward off of it. But even if you took the trade like a little later, like here, you would have still gotten like what, a 10-to-1 trade. So it's really worth it. Now put that into contrast with something like Solana, right? Throughout yesterday, Sol was still showing strength, but just look at this price action. It was kind of zigzagging. Ideally, you would want it to reclaim this and start to show some grinding, and then it just moons from there. But it just wasn't even going, right? Sol, we're watching for 220 being reclaimed. It tapped 220 and just showed weakness. You could still take trades here, depending on your invalidations and stuff. You can still notice the strength on Sol and take a trade against it if you see something. But it's just not as ideal as taking a trade like Hype. Look, Hype is up 4.13% on the day, while Sol is down 0.31%. So if you're going to be looking for a trade to take, you want to take like the stronger one, the better one. You don't want to take something just because you notice a little bit of relative strength. You want to also have that confluence with either a narrative, more levels higher being claimed, and stuff like that. And here's a bonus. This is SPY, but I'm sure that the price action is also combined with like what some other things are taking at the time. Like look at the 1 minute price action. Since the start of the market open, it was like super omega choppy at the beginning, wicked up because of payroll revisions, came back down, came up, came down way hard, bounced, came up, down, and then it starts to show this, but it's also still very choppy. So when you see something like this, this is low time frame chop. There's like nothing you can really do here. Like even if you identify higher time frame levels to work with, just look at this mess, right? I've identified some levels where like there's this low with the Qatar explosion news. Like it's not clean. And so there's just nothing you can really take here. So yeah, I hope that you learned something. Please do leave a comment about maybe what your biggest takeaway was from this. And for me, I would say just don't trade chop if you're losing money and you can't scalp, because it really drains your capital. It makes you lose your confidence, and it makes you really scared to position for the real moves, because the edge isn't in trading the chop, it's recognizing it and having the discipline to sit out until the market is trending or shows you something. So the next time that you're staring at messy price action, really ask yourself if you're trading with any conviction, or are you trading chop?